All right, let's break this question down right now. I want to talk about this in this video here because I get this a lot of times as far as comment wise, question wise, because a lot of people think that you always have to trade in Confluence with the higher time frame. So, do you really need to? Let's talk about that today, especially looking into Q4. We're closing it out. We're rounding out the year, getting ready to move into the new year. So people are trying to gear up. Maybe you're a newcomer or a new beginner trader. And regardless of your strategy or trading strategy that you actually use, let's answer that question and see if you really need to trade or have some type of confluence with the higher time frame in order for you to be successful and profitable. So bear in mind that not every day is there always going to be a higher time frame confluence. So my key thing is this: I'm always looking for breaks of structure. Okay, that's very important for me in understanding. Even on a lower time based or a lower time frame chart, trying to move with the overall direction of the market. So sit back, watch the intro, and we'll jump right into that topic. All right, so let's talk about this. Simply put, a lot of times you guys will see me, especially those that are subscribed to the channel, been following the channel for a while, will see me take trades, and I'm, straight from my 12 range chart. Okay, some people may, it depends on the time frame chart you use. I mean, a 5-minute chart, whatever the case is. So my lower time frame chart, on which I like to take trades from most times, is my 12 range charts. I do have a strategy that I use and I couple. A lot of times when the market is kind of ranging, and it's a great strategy to use that I've introduced, especially if you're a new trader or beginner trader, which is using paired charts, like pairing a 12 range with like a full range chart, and looking for breaks or structures or pullbacks, rejection or failures at areas of supply and demand. But I have plenty of videos on the channel talking about that strategy or sharing information about that strategy and how you trade it. So if you're interested in doing so, go back and watch some of the prior videos, watch some of the videos surrounding supply and demand, kind of type in in the little magnifying glass, the little query tool or research tool on the homepage, and the search tool, I should say, and type in supply and demand. And this other videos on there where I talk about the strategy itself. Okay, so there's tons of videos on the channel where you can watch how I trade supply and demands if I'm using paired charts together. And I highly recommend, if you're a new trader, checking those videos out, because it may be a turning point for someone or anyone that is really looking to learn a decent strategy that allows them to be consistent and profitable. But let's get back on topic here, what I was talking about. Again, a lot of times I trade from my 12 range chart. Some people may trade time-based charts, which is like a 5-minute chart. You could trade that. I'm not saying a 12 range and a 5-minute are, comparable or anything like that. I'm just telling you that lots of people that I know trade, or even, here on the Discord, say for instance, on our Discord server channel, trade a 5-minute chart if they're time-based charts. All right, a lot of people take their trades from a 5-minute chart. And maybe even scale down a little lower to a 1-minute chart if they're really looking to scalp, micro swings and pick up a few ticks here and there. Now, I'm a scalper, okay? So I'm not looking to do any position or swing style type trading. So from a scalping standpoint, it is not 100% necessary in any means or by any means to trade in Confluence with the higher time frame chart, just so as long as you are following in the direction in the movement of, say for instance, like me, a 12 range chart. I trade breaks of structures. I trade supply and demand, first of all. But the thing I'm looking for is always a break of structure, and kind of a gap fill area, a gap in the market. And you have to understand what that means when you see the market moving quickly away from a particular swing area after it's broke through an area of structure to the downside, or taking out market structure or area of market structure, and then it swings. Say for instance, we got a move to the downside. It breaks through an area of structure. I'm gonna show an example here, but it's gonna be more so on a demand setup. Okay. What I'm talking about, you don't always have to follow in Confluence with the higher time frame chart. Now, does it help to follow in the Confluence with a higher time frame chart? Yes, it does. If you get that extra means of confirmation, you are trading, say for instance, in the direction of the 4 hour. Some people maybe or the 1 hour. Me, I'm using a 60 range chart, and maybe even a higher time frame chart, whatever the case may be. But most of the time, I'm looking at my 60 range chart, and I'm just kind of seeing, okay, what direction. Bias wise is, to me, looking at the market, is the market trying to trend overall? And if you can catch a setup, say for instance, price pulling back to a key area of demand or supply on, for me, the 60 range chart. You know, it could be a 60-minute chart. Again, I'm not comparing or saying the 60 range is comparable to the 60-minute chart. I'm just comparing that to the fact that a lot of people trade, you know, using a higher time frame chart, like the 1 hour chart, and then scaling down. But what I'm trying to say is that if you find and have higher time frame confluence with, say for instance, whatever your higher time frame chart is, and then you scaling down to look on your entry chart, the chart that you use to start making your entries off of, and start searching and locating areas of supply and demand, then it definitely is definitely going to give you more of a positive, I guess, motivation to really start, and confirmation to really start understanding and knowing that here we got a higher time frame on one chart, our higher time frame, and then we got a setup that's forming on the lower time frame, and it's moving in direction with the higher time frame. And yes, that move is going to be more powerful. There is more of a probability, chance, or higher probability chance that the market is going to definitely move in your direction. And that's what trading is. You got to understand that trading is all about probability. So sometimes, you know, if you're trading, say for instance, just strictly off of a lower time frame chart, and you don't have you're not taking a trade from a high probable area or high probability area, then there are a lot of times the market may not move in your direction. I mean, just using or trading off one particular chart. But if, for me, like say for instance, I trade supply and demand, and if I'm following in direction of what's going on, meaning based upon the movement or direction or what price is trying to accomplish in an intermediate time frame or whatever the case is, it may be short-lived, but if I can scalp that area because I'm a scalper, you know, so price is basically moving to the upside, then it pulls back to a key area of demand, and I see, you know, prices are making higher highs and higher lows, pulls back to a key area of demand off of, say, my 12 range chart, and you know, and if I'm looking at my 60 range chart, the market could be actually, you know, kind of forming structure or starting to break market structure and start to move back to the downside. But then I'm taking a trade off of my 12 range chart going to the upside. I'm not moving in the direction of the higher time frame chart, right? But I am on a short term basis moving in the direction with my time with the 12 range chart, which is my primary entry chart. Okay, so yes, it is definitely possible, and you can do so. Just keep in mind that the move may be short lived, and you have to know the moment you get into that trade exactly what price is trying to accomplish, even on a shorter time frame chart, and where to get out of it. So I always say this in videos and tell traders that before you enter a trade, analyze price action, analyze the market, look at market structure, understanding, you know, if you're going to take what's called a counter trend trade, know where you need to get out at, meaning your profit target, and you know where to get out if price comes back against you. So for me, a lot of times you'll see if the market's not moving quick enough in my direction, I'm not going to sit in a trade and allow the market to come back and start, you know, placing down drawdown on me. I'm going to go ahead and get out and wait for the momentum maybe to pick up and then get back into a trade. But I want to show you just a setup as an example where the market was kind of had a turning point on the higher time frame, but on the lower time frame, I counter trade. I actually went took a long entry versus taking looking for shorts. Even though the turning point in the higher time frame starts to show that maybe the market's trying to push a little lower now. So we'll take a look here. I'm going to show you. Now, if you look at the higher time frame, for me, this is a 60 range chart. Okay, 60 range. The market was making higher highs and higher lows, right? Pushing to the upside, okay? So when it pulled back right here, what did it do? It pushed up to the upside, okay? Breaking through this area or this high right here, okay? So to me, and looking at this, from a trading standpoint, as a trader, market making higher highs and higher lows, I'm thinking go long, right? Up until this point right here where price starts to, it makes this high, pull back, makes a higher high here. When I see this type of evidence right here, I say, okay, well, the market off to the left-hand side, there must have been something that it rejected or bounced off of over here, okay? And which it did, maybe a little higher here. Let me see what that price point is. 4108, 4108 is up in here. Yeah, somewhere up in here. But anyways, it rejected an area and it decided to turn around and push to the downside, okay? I'm not going to go over there and analyze that situation yet because I'm just looking at the current situation here, the last few or several trading days here. The market made pretty much a new high sitting at the tops right here, okay? But then it turns back around, as you see here, and breaks. We have market structure guiding us to the upside, saying that, okay, the market wants to kind of push higher, right? But then it turns around and starts breaking structure back down to the downside here, right? So at that moment there, you may be having a little shift in your mind saying, okay, all right, the market has been strong to the upside, it looks like. But now it's kind of turned and showed its hand, and now it's kind of, you know, making a low here, a lower high, lower low here. So maybe I'm going to be looking for, you know, entries to go long. Well, this time frame right here, once price kind of broke this low right here, say at 4,072 right here, most people probably would, or most traders probably would start to think that, okay, now I need to start looking for short entries. Price is starting to break back and break through areas of structure or market structure through the downside, and look for traders on a pullback, right, to go short. Right, of course, right here, this would have been an entry to, you know, off the higher time frame to be looking for pullback to an area of supply, which when price broke this area or this low right here, it created a supply area right here, right? Well, all right, for me, I saw a setup on a lower time frame chart, even though the market at this point here started to fail from pushing higher and started to break areas of structure right here on the downside. Like I said, your mind would shift, your bias would shift and start looking for shorts. But for me, when I was looking at December the 1st, the close towards November the 1st, looking at price action from December the 1st. I'll keep saying November the 1st, guys. Sorry about that. December the 1st, which is this trading day right here, I saw a setup to where on the lower time frame for me on my 12 range chart, again, maybe you trade time-based charts, it could be a 5-minute for you. But for me, on my 12 range chart, I started seeing my 12 range chart to where price was making, I'm going to show it to you now, right here, was making higher highs, higher lows, meaning it was breaking structure to the upside, okay? All right? And so it was started making higher highs and higher lows after making this low right here. So when I started seeing, you know, these higher highs and higher lows forming on my 12 range chart, again, I am counter trading from a short-term basis based on price action off of my 12 range chart and not falling in confluence with the price action activity or, you know, that's going on the higher time frame chart. So I'm not looking for shorts. I'm looking for actual a long possibility setup, because when price made this high here, it pulled back, okay, and pulled back even further. So it made a high here, broke lower, pulled back, broke lower, but then it broke through structure right here, okay? So it left behind in areas of demand sitting right here, all right? And what I'm always looking for is a break of structure, okay? All right, pushed up here, made a high, pulled back, boom, broke higher, break of structure here, and made a left an area of demand sitting right here. What is the areas of demand? Demand means that what price has left behind or price has moved significantly through, not through an area, but has moved significantly, you know, with aggressive buying, a lot of buying activity that took place right here. You see all these green candles right here? That was a lot of buying activity with lots of force or lots of thrust to the upside here, all right? Off of this swing low right here. So price had made a high here, swing low, boom, breaks up, breaks through structure, lots of aggressive buying out of this area right here. So again, we got a break of structure here, pull back, breaks higher, okay, leaving behind this area of demand right here where aggressive buying took place at. So as a trader, I'm just looking for, in a scalper, I'm looking for price to pull back to this area right here and look for some failure or rejection to possibly take a long entry, all right? So when price comes back and taps into that demand zone, I look for rejection, all right? Pretty much I look for a break of a candle above this area here, break of a candle to the upside, green candle closing above a red candle. And my aim is to take it back up to this swing area right here, okay? Back up to this swing area. Because if you look at what happened once price continued making these runs to the upside, it turned back around, broke this low right here, so it's breaking through market structure, breaking through structure to the downside, and as it starts breaking structure to the downside. Push down here, pull back, broke structure, push down here, pull back, broke structure, push down here, broke back, broke structure to the downside here, okay? So it took out market structure as it turned back around here to the downside, but below it, there's liquidity resting right here, so keep that in mind too. There's liquidity resting right here, all right? So when price comes back, and we have demand resting right here, so when price comes back to this area here where there's demand resting at, All right, and I see that now we got a turn in or a turn in the market here with price now breaking back lower, taking out this low right here. Once it taps into demand, I'm looking to take it back up to the most previous high, or most previous swing high at least, or try to, or take it back up to the swing right here. Okay, so if you got into this trade, let's see here, pretty much right here, as price was taken out, maybe not right here, okay, because price didn't take out or start to take out this red candle here. It actually pulled a little further down. Then it starts to break right here at 41 and say 40 at 40.72. This is where you take your long at, okay? Take your long and take it back up here, okay? You pick yourself up, 3 or 4 points pretty easy. But I'm scalping off the 12 range chart, which is a lower time frame chart, okay? So that's what you do, and that's how you do it. So I'm looking to, I'm trading in the direction of solely my 12 range chart, my lower time frame chart, and not following in the direction or suit of the higher time frame chart. You can do so, but you have to make sure that you're trading in, like I said, the direction of the lower time frame chart at a key area of either supply and or demand, because the direction here was clearly to the upside. Price pushing higher here, making higher highs and higher lows. All right, off the 12 range. Pulls back to a key area of demand, so I want to follow suit and continue trying to look for a entry to go long, and that's what I did. Pulls back, key area of demand, okay, where there's a breaker structure right here to the upside. Boom, price pushed up, pulled back, broke higher, leaving behind, and pushed up aggressively to the upside after breaking this, breaking structure right here. Pull back to this area of demand right here. So breaker structure, gap fill. Pull back to the area of demand there, look to go long, and look to take that long back up to the next area of the swing area right here, okay? And pick yourself up, like I said, 3 or 4 points, maybe even a little more, 5 points there, okay? So that's pretty much it. I just wanted to show you that, yes, it is extremely and highly possible to trade, outside or moving in the direction or confluence of the higher time frame. It is possible, but just make sure that you're trading like the lower that you get in time frame, be very, very cautious. What I'm trying to say, okay? You can do it off a 5-minute chart, I'm sure. I trade off a 12 range chart solely, and looking for supply and demand setups off of that chart there. Now, it is very powerful, and the probability stands way more in your arena or in your favor if you are trading in confluence with the higher time frame. So if the market's moving, pushing up, making higher highs and higher lows off of the higher time frame, and you can say, oh, the market is pushing hard to the upside. All I need to do is look for, demand setups on pullbacks, whatever the case is, and then you see a nice setup on the lower time frame chart that's in confluence with the higher time frame. That just raises the stakes for you to be able to take a even more high probability setup. So that's all I want to show you guys today in this video here, and let you know that yes, it is possible, because it is. I do get that question lots of times. You have to practice it. You have to be able to see the movements and the follow price action. Look for those demand and supply zones if you are a demand and supply style trader, like I am. And for me, I'm looking for, I always say, 3 things I'm always looking for is a breaker structure, is a gap pretty much in the market where price return, and once price returns back to that area, which is primarily either a supply or demand zone, and then it's pretty much a break of a candle or rejection in that area for me to enter a trade. It depends. You may not wait for a break of a candle. Sometimes I'm more aggressive. I don't fully wait for the break of a candle, especially if price taps into an untested area where there's a gap in the market there left behind, and I'm looking to see that, okay, even on a short-term basis, the market is making higher highs and higher lows. Just looking for pull back to a key area to continue in a short-term, I would say a short-term trend or a short-term, take a short-term scalp type setup to go long. You can do it. Same thing if you're going. Same thing if you're going short. Looking to take a short entry. For a scalp, okay? But that's all I have for you guys today. I hope you guys appreciate and found some value in the content. I just want to throw that out there, answer that question, because yes, it is possible. So, but it's all up to the trader, and you have to be able to read the market correctly. That's all I'm going to say. So I appreciate everyone who's been watching and following the channel. If you're a first-time viewer, please take the time to subscribe to the channel by clicking on the red button down below. That subscribe button. Click on the bell right beside it, which is and turn your post notifications on. So that's going to help ensure that you never miss one of the uploads here on the channel when I drop a video. And that's pretty much all I have. But if you want to join our Discord community, I'll show you that, guys, that right quick. Pull it up right quick. Give me a second. It's loading now. Okay. Right here. So this is a Discord community. We have a few channels set up. The general chat channel, of course, is for traders that are interested in, coming over and seeking information about the future markets. Again, this is pertaining to the future market. So if you're a future trader, welcome yourself in. It's free of charge. You can find the link down in the description portion of the video below. Outside of that, we have the so again, the general chat is kind of like question and answer type for anyone that's interested in conversing with other fellow-minded or fellow-like traders that are trade the future markets. You have a question you want to ask. Always remember this, guys. There's no such thing as a stupid question. So we all start from somewhere, and come over and if you have a question, throw it out there. Someone will help answer your question. Also, the trading floor is set up for specifically what it says, what it sounds like, a trading floor. That means it is an environment, a channel to where we are sharing our levels, zones, trade entries, discussing the setups that we see get ready to unfold, maybe even possibly discussing what your outlook on the market is for the current situation, or current session, I should say. So please, you can join us free of charge. Find the link down in the description portion of the video, and I will see you guys. I'm gonna wrap it up. See you guys in the next video. Take care. Have a great one. If you're trading, please be safe in the markets, and I'll see you next time around.